Wow, the Australian dollar is on an absolute tear. In just 1 week, it's surged against the US dollar to a 3-year high. So, what's behind this dramatic move? Well, it's not just one thing. It's a fascinating story with three distinct parts: a surprisingly hot Australian economy, a uniquely pressured US dollar, and a global boom in commodities. Let's break it all down.
I mean, just look at that number, a 3.19% gain in a single week. In the world of currencies where moves are often measured in tiny, tiny fractions of a percent, that is a seismic shift. This is actually the strongest weekly performance for the Aussie since April of last year. It's not just a statistic, it's a huge statement to the market.
So the big question is, what is fueling this incredible rally? And like I said, it's not just one single thing. It's this compelling tale of two major economies. And right now, they're heading in very different directions. To really get what's going on, we've got to start down under in Australia. For a little while, pretty much everyone thought Australia's central bank, the RBA, was done raising interest rates. But a recent batch of economic data has completely flipped that script. Okay, so check this out. Annual inflation is coming in at 3.8%, way hotter than anyone predicted. And at the same time, the unemployment rate just dropped to a surprisingly low 4.1%. What this data is telling us is that the Australian economy is running really hot, and there's not much slack left in the system to absorb all that pressure. And how is the market reacting to all this? Well, traders are basically looking at this data and saying the Reserve Bank of Australia will have no choice but to raise interest rates to cool things down. They're now pricing in a whopping 72% probability of a rate hike at their very next meeting on February 3rd. That is a massive shift in expectations, and it makes holding Australian dollars suddenly a whole lot more attractive. You'll hear analysts call this aggressive pivot a hawkish stance. When a central bank gets hawkish, it's just signaling that it's ready to get tough on inflation, usually by raising rates. The opposite is a dovish stance, which is when a bank is more focused on growth and might even cut rates. And right now, the RBA is looking very, very hawkish. Okay, so that's the story on the Australian side of the equation. But remember, a currency pair has two sides. A strong Aussie dollar is only half the story. To get the full picture, we have to look at what's happening with its counterpart, the US dollar. A crisis of confidence. That is a powerful phrase, isn't it? But it's exactly how one market analyst just described the mood around the US dollar, or the greenback, as you'll often hear it called. It really points to a deep uncertainty that's causing investors to look for safety somewhere else. So what's driving this feeling? Well, there are a few key things at play. First, there are these growing concerns about political pressure being put on the U.S. Central Bank, the Federal Reserve. Second, some recent remarks from the administration were seen as downplaying the dollar's decline, which, ironically, only made it weaker. And third, with all the geopolitical uncertainty in the background, a lot of investors are just looking to hedge their bets outside of U.S. assets. When you put it all together, you get this really stark contrast. On one side, you have Australia's central bank getting ready to raise rates to fight inflation. On the other, you have the U.S. Federal Reserve facing political headwinds and a shaky outlook. This difference is what creates such an incredibly powerful dynamic. And this dynamic has a name. It's called policy divergence. It's what happens when the monetary policies of two countries start moving in opposite directions. You can think of it like two powerful rivers colliding, one flowing north, the other south. The result is a massive whirlpool of activity in the currency market, and that is exactly what we're seeing right now. But wait, the story doesn't end there. There's a third major factor that's basically supercharging this whole rally, and it has to do with what Australia sells to the rest of the world. The Aussie dollar is often called a commodity currency. Why? Well, it's because Australia is a resource powerhouse, and the value of its currency is tightly linked to the global prices of the raw materials it exports. We're talking things like iron ore, coal, and, crucially for this story, precious metals. And right now, we are seeing a massive surge in commodity prices. Gold is up 2.8% recently, and silver is up an incredible 7.86%. Since Australia is a major producer of these metals, this precious metals mania acts as a huge tailwind for the Australian economy and, by extension, its currency. So we've seen the three key drivers: a hot Australian economy, a weakening US dollar, and a commodity boom. Now let's put it all together and look at what to watch as this story continues to unfold.
So to recap, you've got these three powerful forces all pushing in the exact same direction. Australia's strong domestic economy is forcing its central bank to get hawkish. The US dollar is under pressure from that crisis of confidence. And then a global commodity boom is adding extra fuel to the fire. It's this perfect storm of factors that's creating such a powerful move.
And the next chapter of this story is literally about to be written. This very week, we have the U.S. Federal Reserve's interest rate decision. And then, on February 3rd, all eyes will be glued to the Reserve Bank of Australia. These two events are going to be absolutely critical in determining where the AUD/USD goes from here. So here we are, with a tale of two economies on very different tracks. The big question is, which narrative is going to win out? Will the hawkish Reserve Bank of Australia continue to drive the Aussie higher, or will the US dollar find a way to fight back? The next few weeks are going to be telling, and you can be sure we'll be watching.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.